Hello, everyone. Welcome to this special webinar today, where we're going to look at predictive accounting. I'm joined by Paul Barnaby, who is Mr. Predictive Accounting, and Paul's going to give you an overview of this great approach to making accounting become alive. We're not historians. We should never have been historians, but this package developed by Plan Guru gives you the opportunity to be helping your clients plan their future. How are you today, Paul?
I am just great. Thanks, Peter.
Okay, well, I've given you a wonderful introduction, I think.
You certainly have.
So it's over to you to give us an understanding of what this whole process of predictive accounting is about.
All right, okay. Be very pleased to do so. I'll just share my screen and grab my presentation.
Yeah,
okay.
See now, Paul.
You should be seeing that now.
Yeah.
Okay. So yeah, my topic today is predictive accounting, and I'm not sure I'm Mr. Predictive Accounting, but I will say this: there are very few people who, like me, specialise in this area. It is a very specialised area, as you will find out. But it's interesting to know how I came to be where I am, and I'll cover that as I go in the slides, Peter. Because what it enables you to do is firstly make budgeting and forecasting very easy, because that is the niche content of predictive accounting. But it enables you in your role to your company or clients to be a real hero when it comes to virtual CFO services. And Peter is absolutely right. We don't want to dwell on history. We want to help our clients create the future. So what is predictive accounting? Well, really, in its simplest terms, it's nothing more or less than doing for future accounting periods what we're so used to doing for the historic accounting periods, preparing profit and loss, preparing balance sheet, but more importantly this time round, as a result, looking at predicted cash flows, because that's what predictive accounting allows us to do. And like we do in Maya, QuickBooks, Xero, whatever that happens to be the system we use, we're going to do this in those international formats that are widely accepted. Why is it done? That's a little more simple. It's done so that those important strategic decisions can be made much more quickly. Because really what it's all about is unlocking profits, improving cash flow, the core reasons why people are in business. And that leads them to achieve their own goals and targets. So what we're saying is that by using predictive accounting, we can identify what our shareholder or owner of the business goals and targets are and show them how they can get there by applying certain strategies. How's it done? Well, yes, it's not easy, as many of you will have found, as if you've tried, but the key part of it is looking at the key drivers of revenue, costs, and of course, capital items, and translating those to predicted financial statements. It's no longer any use taking last year's actual results out of our historic accounting system, putting it into next year and adding a bit for inflation or whatever and saying that's the budget. Because if the budget's not attained, what went wrong? Was it if we sell products? Was it the number of products we sold? Was it the price we sold it at? Was it the market we were in and not in another one? Was it the number of staff we had on board? Those are all those drivers.
Yes, Paul, and that's that traditional, let's call it traditional way of doing things, doesn't allow anything to do with supply problems either, does it? Look at what's happening now around with a lot of our clients getting access to supplies. They're having to hold inventory longer, and they need to have that factored into their financial forecast, don't they?
Oh, absolutely right. I feel for builders at the moment. The building industry is in a total shambles. I personally have a small extension to my home, which was designed last year. Engineering and architecture finished in January. Builder priced it and said he'd do it in March, April. We think we might get going in September.
Yeah.
Now, how can you plan for that without looking at those timings and the quantities of materials and all that? You're absolutely right.
Mm.
So what makes me passionate? Well, as Peter said, I am a chartered accountant, and for 16 years I was manager of a second-tier firm. And my habit was I used to get to work about 8 o'clock in the morning. I'd sit and go at my desk, grab a cup of coffee, grab a piece of paper, and just make a plan for the day. And one day I did this, and I had this dreadful sense of foreboding. I did not want to be there that day. Why did I not want to be there that day? I had had compliance up to here. I'd had filling out government forms called tax returns up to about here. And I decided I would make a wholesale change that day. I wouldn't think about it. I would just get on with it. So I dropped all the accounting, historic accounting, and compliance work that I was doing. I didn't drop it. I delegated it, obviously. And I got on with strategic planning for my clients. And since then, I've done nothing else. I have absolutely specialized in this area. I now help accountants in practice and in commerce implement predictive accounting. And that, of course, includes financial analysis and strategic planning. But the key, obviously, is the budgeting and forecasting. I have my own consulting practice, as you'll see on my slide, called Beyond Accounting Technologies. But I'm also the regional integration consultant for Asia Pacific for Plan Guru, which is an American company based in Pennsylvania. And they have a budgeting forecasting tool which they invented and is now widely distributed around the world in about 55 countries. And I selected that as my tool of choice. There are a few out there, only a few. Not many of them do it properly. Plan Guru does. So just giving you a bit more of my background, I've worked with many hundreds of CFOs, accountants, and business executives, and I like to think that my job is to help them look like a superstar. Okay, so that's the sort of background to me and what I do. So you need a budget. What have you done in the past? What do you do now? You reach for Excel, right? Wrong. Excel or Google Sheets these days are great tools, but they were never built for predictive accounting. And I am continually surprised at the number of people that continue to do so. Excel was built for chemists, it was built for engineers, it was built for accountants, yes, but never for predictive accounting. And that's why it's so difficult to do, particularly the three-way profit and loss budget and cash flow is enormously difficult. Anecdote I haven't shared with you, Peter, I once struck an accounting firm, they were actually in Toowoomba, who had prepared a three-way forecast in Excel, and they'd done a pretty good job. But it wasn't just an Excel workbook. It was about 5 workbooks and 156 sheets.
Yeah.
Imagine maintaining that. Just imagine it. So, and would you recommend Excel in place of Xero, MyOb, QuickBooks, etc.? If they asked you what do we use for our accounting, of course you wouldn't. Then why use it for predictive accounting? It's quite an easy decision. If you're still not convinced, there's a really nerdy fellow called Ray Panko who's at the University of Hawaii, and he looks at spreadsheets every day, all day. Would drive me nuts. He's published some research papers, and he's found that 91% of freely available Excel spreadsheets have errors in them, which the author doesn't know about. I repeat, the author doesn't know. 91%.
That's frightening, isn't it?
Absolutely scary stuff. But here's another thing. Excel would take you about, I've just explained, described that huge Excel book that the client in Toowoomba had. Excel is going to take you 10 times as long as a purpose-built application like Plan Guru. So why would you bother? And Plan Guru also is very affordable, as you well know, Peter. So yeah. It's just not a question, but it's a topic I have to cover. And as I was saying earlier, there are a choice of applications. I've chosen the best for technical reasons when you compare it to the cost. And when there's a better one, well, I'll be letting you know, Peter. But right now, Plan Guru are just continuing to foot it with the best.
Yeah, but Plan Guru's been continuing to evolve, hasn't it?
Oh, absolutely.
Yeah.
Absolutely. Right now, for example, they have a cloud version on release, and not in Australia or New Zealand at the moment because it's still not quite GST compliant. But yes, they're developing that, and they're also developing the communication with your client or company by making, again, cloud-based reports. I'll show you charts, etc. in a minute. Yes, they're continuing to evolve. They are focused on continuing to be the best tool out there for predictive accounting.
And that's what they intend to do in the future. And that's very important for our accountants watching, and bookkeepers and business advisors watching this recording. They've got a strong commitment, and we've heard that from Trip Graham, their marketing director.
Exactly. And by the way, Trip did apologise. He would have joined us today, but it is Sunday night in the US, so we'll let him have a weekend. Okay, so here I've got up on the screen, you can just see a sample of a P&L or an income statement month by month. And you can see there it's a computer reseller. So I won't go into the detail, but that's the style of thing you get with Plan Guru. And this is all automatically prepared. That's the income statement. There's the balance sheet. And you can see there that, again, that is in traditional formats, all easy to understand. And there's the cash flow. In cash flow, you have the choice of two key formats. One's called the direct method, which means you start from revenues and work through to the operating cash result. You then look at cash that might be used or provided by investment or financing activities to get a net increase or decrease in cash for the month. And then obviously a rolling balance. So all pretty standard, but the recommended standardized reports. I mentioned dashboards before. Plan Guru are already at this level. This is available with the current tool, and it is cloud-based. You can self-style it. It doesn't have to have Plan Guru. Well, we've got Plan Guru, ESS, BIZTOOLS, and Beyond Accounting Technologies up here, but you can just have Beyond Accounting Technologies. And you can style your dashboards and reports on a client-by-client basis. So if they don't like pie charts, you don't have pie charts. If they love bar graphs, that's all you have is bar graphs. If you wanted to do a scorecard, you can do a scorecard. You can design the reports. It's very, very flexible. So you're quite right, Peter. Yes, they're so focused on the ongoing commitment. And one of their great philosophies when it comes to preparing this data is they want you to be consultants. They don't want you to be data entry operators. So they make it easy to import data, they make it easy to export data, and they make it easy for reports, as I've just been talking about.
And that's very important, isn't it? That the accountants who are using this material are seen, accept themselves that they're acting as consultants, but also that their clients see them, that they're acting at that chief financial officer type level.
Absolutely right. Okay. Is there anything else you want to cover or want me to cover on the predictive accounting side, Peter? Otherwise, I'll talk, or you might like to talk about the joint venture, which is just being released. Up to you.
Yeah, well, I'll just check. We've got no questions, and we should have asked, but I didn't at the beginning. If you have any questions or comments that you'd like us to look at, can you please type them into your computers, and we will answer them a little bit later on. And if you think of some questions later on, because obviously we're recording this presentation today, and it will be sent to a lot of you in the next day or so after we've had this live webinar. And if you have any questions later on, please send an email peter@essbiztools.com.au, or Paul, they can communicate direct with you. Do you want to just give your email address? Thanks.
Yes, certainly. Just, it's an easy one, paul@beyondaccountingtechnologies.com.
That's paul@beyondaccountingtechnologies.com.
That's it.
Okay. Well, one of the important things that we have negotiated over the last few months, I must admit, we started negotiating probably a bit longer than that, but anyhow, we finalised through all the interruptions built around COVID-19, and that's a joint venture between Beyond Accounting Technologies, ESS BizTools, with the developer of this software, Plan Guru, in the United States. And Paul and I have had some great working sessions with Trip Graham, who's the marketing director of Plan Guru. As Paul said before, Plan Guru operational in 55 countries around the globe these days. And it's interesting to hear their story. And in our final webinar in this series, which is towards the end of August, we will have Trip Graham participating again, and he can give an overview of where Plan Guru has come from. They were a family business back in the 90s, but they had a fairly significant change about, what, 8 or 9 years ago, Paul?
That's correct, yes.
And that's when they realised, I think, listening to Trip Patelli's story, they realised that they did have a good product that needed some modifications, which they did, and they needed to get it out into the marketplace, which now it's in 55 countries, and Paul's obviously their representative in the Asia Pacific area. So it's good. It's a good product. It's good software. I've used it, and I had previously used Excel, I must admit, and I tried to get three-way forecasts. I don't think I had many books as what you just referred to, but maybe it wasn't as complicated an exercise. I know I had to review one done some years ago. It was the valuation of a marina, and they'd done cash flow forecasts going forward 25 years. I've never seen so much paper in my boardroom. It was when I was still in practice as an accountant. We had this boardroom covered with these Excel sheets as I tried to review what someone else had done on their calculations to substantiate a valuation. So you can end up with a lot of paper when you try to do it that way. I think we would have all loved to have had Plan Guru back then when that exercise was being undertaken. So the joint venture with Plan Guru is they're supplying the software package, which the big news there is that you as a subscriber will be able to use that for 10 of your clients. That's a special agreement that's been negotiated between the joint venture and Plan Guru. Normally, that is, you only get access to use it for 3 clients before you have to pay Plan Guru an additional payment. The agreement to extend it to 10, we calculated it being worth about $3,400, I think, Paul.
That's correct.
That's a very good contribution that's been made. Paul's role as the representative for Plan Guru in the Asia Pacific area, and also as the managing director of Beyond Accounting Technologies, is to supply the key support and training role in this product package. ESS BizTools is involved because we prepare various materials on budgets and cash flows, and on the key items that are taking into account in the formulation of budgets and cash flows. So you don't have to do your calculations on bits of paper and then you lose them. It all comes together in the overall structure, because there is a separate section within the software for the key drivers to be summarized. So whether they're the future forecasts from the marketing or sales manager as to what sales might be, whether it's your forecasts of raw material availability and calculating the quantities and the price per ton or whatever that you're going to have to pay for that, the shipping costs, the forecasts of inventory, final product inventory of stock, forecasts of electricity or other sort of power generation usage, so you can follow it through. And so you have a working paper file so that anyone that's wanting to go back and do an audit or a review on how all this was put together can readily find it. It's not on a bits of paper that or that have been lost in the system. It's all within the Plan Guru system, because we've got this special section whereby all of those calculations can be made. The team members, what team do you need, especially if you're working shift work and weekend work and all of that. It's all able to be collated, and that's one of the big benefits I find in this software, Paul. And that is then linked obviously to the budget or the cash flow forecast, and obviously through to the projected balance sheet as required. So that you put it in once, and once you've got it set up, it's reflected everywhere where it might be. We'll give you your calculations of how your debtors figure's been determined and your creditors figure and so on. And you can record other items like taxation commitments and capital expenditure and dividend payments or funding requirements for the business can all be collated, so it's available within the key driver area, and that all links to the other components. So I'm just going to check and see if we've got any questions. We've got no questions. Paul, do you want to talk to us then about your next big project, which I find very exciting, and that's the certified practitioner within within the CPA classification?
Yes, indeed, CPA. Lots of people use those letters, but we've got a new one. The CPA is a certified predictive accountant, and what we will do there is that if you sign up for the package through ESS BIZTOOLS, as Peter said, I will be working with your firm over 3 months to roll out predictive accounting effectively. I will be working on a client-based collaboration. I don't just run a workshop and say this is your training and that's it, goodbye. No, it's all done on practical examples, and I'd be in specifics. I'd be looking at drivers. So over the course of the 3 months implementation, and yes, you would get obviously the software from Plan Guru, as well as all the work papers and assistance that ESS BIZTOOLS can provide. But the end result of that is subject to, you can't get any qualification without an exam, a little test at the end of that rollout will convince us that you are entitled to use those letters CPA, Certified Predictive Accountant. We'll give you a logo to put up on your website if that's what you'd like to do. We'll give you a certificate that you can put on your wall. But the essence of it is that we will train you to do what Peter and I can do. We will train you. So next time your client rings up and says, I need a budget, you have a session with them and you talk about drivers and you talk about what's going to happen if this and this and this happens. If COVID-19, you're going to really know exactly what to do. Just going right back to that light bulb moment I had all those years ago, it was partly triggered by an event where a client of mine had been asked for a cash flow, a budget by the bank. Can you give us a set of budgets for the next couple of years? So I prepared a set of budgets and I sent it down to the bank, but the bank manager was extraordinarily astute and in front of his time, because he rang me up and he said, Paul, he said, you've given me a profit and loss in the balance sheet budget. I said, that's right. He said, well, what about the cash flow? And my stomach turned 3 flips. And I thought, how on earth am I going to turn that P&L and that balance sheet into a cash flow forecast? we didn't have tools like Plan Guru. So that's what we'll train you to do. We now do have things like Plan Guru, and the outcome of that process will be to turn you into a CPA, Certified Predictive Accountant.
Yes, Paul. And another aspect in all this is many of us are dealing with clients these days who have got some aspirations of scaling up. And in other words, growing their businesses. They currently might be sitting on $1 million turnover. They've got a dream of going to 5 million in 3 years, or they're currently on 5 and they want to go to 12 million or whatever. One of the key requirements there is really looking at this whole future playing field. They're not really interested at all in the past. They want to have a clear understanding where they're going. And as I think every accountant knows that's been involved in this, as you're growing a business, as they're scaling up, one thing that you can virtually guarantee yourself that they need is more funding. They run out of money very quick because it's all very well to increase turnover, but that normally means your debtors have increased. And as you grow, maybe the suppliers have put very strict payment terms on your client. They want to get paid strictly on 30 days, no longer. And if it's any longer, they won't supply. But as you take on, your client takes on new customers, I tend to observe that the debtors days outstanding tends to expand. It goes from 50 days to 60 to 70 days because you've taken on new customers, but they all don't want to pay on a 30-day basis. So the business runs out of cash. The business might be undertaking significant research and development as part of this process to expand the business. That also costs a lot of money. And even though the government gives some sort of reimbursement, 43.5% of the expenditure on R&D, it's over a year later. You've got to go the whole year and then lodge. And it might even be 18 months later before you get your client gets their hands on that cash back from the government. So the funding of the business becomes very, very important. And I think this is where this software really works in to help an aspirational company that is wanting to scale up their operations. And they're good clients, but you've got to keep them under control. You've got to make sure they view the reality. It's just not a matter of making sales. There's normally some significant outlays got to occur with that. And that costs money, and they've got to find it from somewhere.
You're absolutely right, Peter. One of the key components of predictive accounting is that it is used in a collaborative and consultative fashion with your company or client. So you don't just prepare the budget and say, doesn't that look nice, and then go and put it on the shelf. You compare budget with actual as the actuals start to roll out. Not only do you compare budgets with actuals, but have a look at what might have gone right or wrong, you then do a rolling forecast. There is a difference between a budget and a forecast. A budget is a budget and should be sacrosanct and approved and then put on the shelf, yes, but the rolling forecast will continually update the expectations. So if there is a forthcoming cash flow crisis, as you've just been talking about, you'll know when it's going to hit and you'll know what you need to do. You'll know to go to the bank 3 weeks, 4 weeks, 6 weeks before to say, can you cover this shortfall? We're predicting that it will come right 2 months after that. That's what predictive accounting is all about. It's not just a theory, it's an actual live engagement that you have with your company or client.
Yeah, and another part of that, Paul, is to say, well, if they're going to go to the bank, that's fair enough. But if they got security that they can mortgage, or they already mortgaged right up to there, and none of the shareholders or directors are prepared to put their mother-in-law's apartment on the line, she mightn't be too happy about that in any case. So what that highlights is some forewarning that in 18 months' time, the company's going to need an injection of $1 million. Where's it going to come from? And they could look at crowdsource funding, equity raising, and get themselves prepared. Now, a few years ago, we couldn't do that, but we can now. And get ready to go to the public, appoint a crowdsource funding intermediary, and go down that path. And if you plan it within 3 or 4 months of hitting the start button, you should have your $1 million in the bank. As long as the client is running a reasonable business, and has got a vision, knows where they're going, and a good leadership team. The crowdsourced funding equity raising process is starting to produce real money around Australia. And I think it's incumbent on us all then to make sure that those types of companies receive great advice so that they continue to run their businesses appropriately. Because if we get too many failures because they haven't done their forecasts right, that will sour that type of market for investors, and that would be detrimental to thousands of small businesses that I think over the years will take advantage of being able to raise capital in that manner.
But going back to your original point, Peter, I did some research 10 years ago now of SMEs that had failed, actually gone into liquidation or administration. A huge percentage of them were still profitable at the day they entered administration.
Yep.
They had never incurred a loss. What they'd done was failed to budget for that cash flow crisis, and it overcame them.
That's right.
And I found that was fascinating. And not a lot of people realize that there are companies out there that go broke making money.
That's right.
It doesn't make sense, I know, but it happens.
Yeah, it's the funding of those key assets like debtors, stock, work in progress, research and development activities, capital expenditure, and new flash buildings also can take a bit away. And perhaps the owners paying too much in dividends or taking too much in loan funds out of the business. And that's where this whole exercise of predictive accounting, sitting down and having that conversation with the client, can try to curtail some of those poor management decisions being made.
Yep.
And this is what public companies do, because they got the resources. But now with the Plan Guru software, and obviously with your expert training, people who are offering services to SME companies or businesses can take advantage of this ability to be on the same plane, if you like, same level as listed public companies, how they get their advice and do their projections.
Quite right.
Okay, well, Paul, we don't have any questions. We've got some people on watching our show, so hopefully we've answered all the questions that they had come up. But you can find out more information by going to the ESS BizTools website, www.essbiztools.com.au, and click onto Predictive Accounting. There is a landing page there which will give you full details. The details of the subscription prices for this full package are shown there. There is a discount available for ESS BizTools Gold subscribers and Silver subscribers because you're already receiving the ESS BizTools component of this joint venture. If you have any questions, please go on. We do have a question, Paul. Just hang on a moment.
Okay.
Oh, thank you. One of our viewers, Mark, has said, good session. Thank you. That's great, Mark. I hope we gave you all the answers you were looking for. And that's great. Okay, so Paul, thank you very much for being with me today and giving this your expert overview of where predictive accounting is going. And I hope that a lot of our viewers, not so much today, but when they view this as a recording in a few days' time, really take note of this opportunity to become a CPA, a certified predictive accountant, and that will mean, of course, that they learn a lot more about this and then able to utilize it for the benefit of their clients. So thank you. Thanks, Paul.
Thank you, Peter.
We'll catch you later on then, eh?
Okay.
I'll just finish.
Yep. Finish up. Yep.